I call the Honourable David Parker.
Mr Speaker, this debate should be about the economy. New Zealanders are opposed to asset sales because they know that changing who owns what already exists does nothing to change the output of the New Zealand economy. These assets already exist. They're not going to be more productive than they are now. The only way they'll be more profitable than they are now is if electricity prices increase. Mr Speaker, one of the prior speakers, I think it was Tony Ryle, tried to tell us that New Zealanders will be better off as a consequence of the sale of these assets. The truth is that only around 1% of New Zealanders will end up owning these.
1%?
The vast majority of the shares in these companies, once sold, will be owned by the 1%, not the 99%. Maybe it'll be 2%, but the vast majority of these shares will be owned by the 1%, not the 99%. Is it necessary? We had a lecture from the National Party on debt. During the term of the last Labour government, the Labour government ran budget surpluses that National opposed. It was difficult to do because National and others were saying, don't run surpluses, please give us tax cuts. Instead, Labour, with the support of New Zealand First and the Greens, ran surpluses. We reduced government debt from 40% gross to 17% of gross. 17%. Net debt went down to zero. And as a consequence, the incoming National government inherited amongst the lowest government debt in the world. Amongst the lowest government debt in the world. Even after the budget deficits that the current government is running, and this year it'll be around $12 billion, last year it was $18 billion, even after the government gets back into surplus, which will be around 2014, 2015, and would have been on Labour too, New Zealand has amongst the lowest government debt in the developed world. The government debt is not New Zealand's biggest problem. The growth in our economy is, and this does nothing to improve New Zealand's growth. New Zealanders know that. That's why they're opposed to asset sales. Mr Speaker, the budget policy statement came out a couple of weeks ago. The opposition parties have been very critical of both the government and the Treasury, who in this were the lapdogs of the government, for booking the proceeds of sale of the SOEs in the prior budget and in the pre-election fiscal update, but not showing what happened as a consequence of loss of the ownership of half of those companies. The budget policy statement does it for the first time. What does it say? And this is a quote from page 7. It says, "The forecast finance cost savings from the sale are less than the forecast foregone profits. The government deficit goes backwards as a consequence of selling these assets." How much? How much? Well, according to page 6 of the budget policy statement, the loss, which includes the foregone dividends and the foregone share of retained earnings, that's the two components, the loss is more than the dividend saved. How much do they go backwards? Well, in 2014, the estimated going backwards is $87 million. In 2015, $98 million, around $100 million per annum worse off. It's another example of why this bill should be called the 1% bill, because not only does it end up by what's owned by about 1% of New Zealanders, the majority of these shares, but that increase in the government deficit, that's the operating balance before gains and losses of $100 million a year, is actually roughly 1% of this year's deficit. It's a large amount of money. $100 million a year worse off as a consequence of the sale of these assets. The government would be better to borrow that money for the capital expenditure and keep these assets, and New Zealanders would be off, even in the short term, they'd be better off by $100 million per annum. We had the Prime Minister say none of these shares, or very few of these shares, would end up in overseas ownership. That wasn't the experience with Contact Energy, not even in respect of the privately owned, the smaller investor portion of the Contact Energy sale. That ended up a lot in overseas ownership. And now in the budget policy statement, for the first time, we have the acknowledgement, and I quote, "The government," this is on Treasury advice, "expects New Zealand ownership of the companies will be around 85 to 90% following the sell down." In other words, up to 30% of the shares, because they're only selling half, up to 30% of the shares that are going to be sold are going to end up in overseas ownership. Mr. Speaker, it's already clear that the government's trying to convince New Zealanders that if the government deficit comes down, they've succeeded in managing the economy. The deficit will halve in the next year just because of the consequences of the Canterbury earthquake flowing through. That's no success of economic policy. The rest of the government deficit will go away through a bit of austerity and a little bit of growth. But the underlying structural problems in the New Zealand economy remain, and this does absolutely nothing to address them. The underlying structural problems in the New Zealander economy are that for decades we have exported less than the cost of our imports and our interest bill. And every year that happens, you have a current account deficit, and in the projections from both the Treasury and the Reserve Bank, every year from here to the end of the projection period, New Zealand's current account deficit gets worse. It gets worse. In other words, despite the rhetoric of Mr. English saying that they're rebalancing the economy, they haven't. And every year, New Zealand has a current account deficit which, according to the Treasury, by 2016 will be 6.9% of GDP. And every year you have a current account deficit, there's only one way that gap between the costs of your imports and your interest bill and your exports, there's only one way that can be, or two ways that can be funded. One is by borrowing more money from overseas, and the other is by selling your assets to overseas people. What was previously New Zealand owned becomes overseas owned. That's how you fund a current account deficit. And that's what this government's got as its plan for New Zealand, because under current settings, that's what happens. Every year, to the end of the projection period, 2016, if New Zealand's unlucky enough to have a national government then, they would have been in power for 8 years, and yet every year New Zealand would be getting poorer. So that in 2014, New Zealand gets poorer, 2015, New Zealand gets poorer, and 2016, New Zealand gets poorer. How does that show up? It shows up in increased overseas debt. It shows up in increased proportion of our assets, our land assets, our power companies being in overseas ownership. Mr. Speaker, this plan, if you call it that, is the central plan of the government's economic strategy for this 3 years. It came about because they were being criticised as having no plan. That's what happened. This was an ideological birth from the government during the last term of government, following the criticism that was hurting them, that they had no plan for the economy. So this was their plan. This was their plan to change who owns what already exists. Mr. Speaker, we hear the suggestion that this is necessary so that people have got things to invest in. Investors, if they want infrastructure investments of this kind, can already invest in Contact Energy, or Trustpower, or Vector, or Telecom if they want that sort of infrastructure, or the ports of Tauranga. They've got plenty of alternatives. They don't need these. The idea that New Zealand capital markets will only prosper if we let them trade what the government creates is such a negative view of New Zealand's capability, or the capability of New Zealand's private enterprise. If the only way that private enterprise and capital markets in New Zealand can succeed is selling what the government's created, what does that say about private enterprise? Well, in the Labour Party, we actually have a much more aspirational view of private enterprise. We think that private enterprise will succeed and grow the exports and grow the jobs that New Zealand needs to grow the incomes that we all need and start going forward as a nation if the government pulls the levers that only a government can pull, but this government refuses to. The briefing from the Treasury to the incoming minister said they had to address some of the imbalances in the economy which lead to our current account deficit, lead to our rising international liabilities, our overseas debt and our overseas ownership of New Zealand assets. And they said one of the really important things was to address the proper investment signal into the economy so that people invest on the basis of the profitability of their investment rather than the tax effectiveness of their investment. That the reason too much investment in New Zealand goes into the speculative land sector and not enough into companies that grow for people to invest in, for companies to manufacture goods, for the jobs and incomes that flow from that. The reason for that, or part of the reason for that, a major part of the reason for that, is there's a tax break for the alternative. So they said Treasury's advice was tax capital income equally, a la the sort of policy that the Labour Party and the Greens as well have been advocating in terms of a capital gains tax. Pulling levers like proper tax signal, proper investment policy, proper savings policy, decent monetary policy is what we need. We can never sell our way to a brighter future.
I call the honourable member Dr. Russell Norman.
Thank you, Mr. Speaker. Mr. Speaker.